Hello guys, very glad and happy to have you all here because not only is the wonderful webinar by Dr. Al today on Algo Awards, it's also the US Prelim GDP, the main topic of discussion for us and definitely you guys out there today. As you can see, at the current moment, the forecast stands at 2.1%. And the prior figure stood at 1.5%. And you can definitely see the projections, sorry, not the projections, but the estimates of the past 10 use. And sorry, Doc has something going on out there. So yeah, the tapered GDP growth rate that was initially reported for the third quarter is on track for a moderate upgrade today, according to Trading Floor Saxo Group, and the crowd looking for a revised growth of 2% for Q3, according to Briefing.com's consensus forecast. That's a moderately strong pace versus the initially reported 1.5% gain. If the outlook is accurate, the news of a firmer pace of output will fuel more confidence that the Federal Reserve will start raising interest rates and its policy meeting that is scheduled for December 16. The Fed Fund Futures market estimates the probability of a hike next month at over 70% based on yesterday's data from CME. Meantime, some analysts are looking for even stronger growth in Q4 GDP, but we will discuss it a little bit later because I want you to show the economist view on the matter. Top 10 economists surveyed, and here you go. The Bloomberg survey summary we have, according to that, where the median estimate stands at 2.1%, average estimate stands at 2.05%, high estimate stands at 2.4%, low estimate stands at 1.5%, whereas the number of estimates this time has reached 76. And getting back to those gossip, as I would like to call them, around the Q4 GDP. So BMO capital markets, for instance, anticipate that economic activity will accelerate to 2.9% in the U.S. in Q4 GDP, and they see that the underlying trend is in the U.S. economy still positive. The economist team at Wells Fargo wrote last week, but the firm is currently looking for Q4 growth of 2.2%, which is effectively unchanged from today's expected revision for Q3 growth. The risk of a recession for the U.S. is still a low probability event, but the case for anticipating a meaningful upgrade in the macro trend via the hard data remains open for debate. The bulls arguably have a stronger case, but first let's see how today's beat expectation for a Q3 revision are grounded in more than wishful thinking. And if we'll continue, so the Fed said on Wednesday that they're considering the mentioned December 16 meeting, and just the day after the October meeting, as you all know, the Fed got the first details on how the economy fared in the Q3. And yeah, by the way, GDP rose 1.5%, just to sum up, compared to a 3.9% increase in the prior 3 months, according to Commerce Department report. That gain was in line with the 1.6% rate projected in a Bloomberg survey economist. The slowdown came as companies reduced bloated stockpiles, so many economists say it will be short-lived. Revisions to these figures will be released today. By the way, while economic growth isn't explicitly part of the Fed's dual mandate of stable inflation and maximum employment, the strength of the economy matters hugely for those goals. And I guess that's a roundup on today's fundamental part of the economic data release. And my colleague Max will continue with the technicals. Please, and thank you.
Thank you very much, Polina. Hello, everyone. I hope you have a great Tuesday so far. So yes, as Pauline has just said, we are having the US second estimate GDP data released in around 5 minutes from now, and actual expectations are quite positive. For today, the median estimate stays at 2.1%, as Paulina has already mentioned, so it's a positive revision probably from 1.5% we have seen some time ago. At the same time, there are some financial institutions which project even higher increase in GDP. For instance, Nomura Securities expect 2.4% growth, while Deutsche Bank and JP Morgan Chase foresee an increase in GDP of 2.3%. Nevertheless, we still have the positive surprise trading strategy and way for today, considering these positive expectations of the market on aggregate, and we have the euro-dollar currency pair for the purpose of discussion. So as you can see, the market sentiment on this currency pair is actually perfectly neutral right now. While if we have a look at the pending orders, they are set to sell this currency pair in the majority of all the cases in 50 and 100 pip ranges from the spot price, meaning that traders are putting more more pending comments and as the sell ones for the euro, and subsequently, of course, as the buy ones for the American currency. Speaking about sentiment provided by other market participants, we see actually that the daily FX and Saxa Group traders are pretty much divided on the matter right now, as our traders are as well. Speaking about the trading strategy itself, as you may see, the currency pair is currently trading at 106.53. Level, and of course is usually to project the possible market reaction after the data is published in around 2 minutes from now. Let's have a look at the previous reactions for the euro-dollar currency pair, which actually on average used to be 23 pips in the last 5 quarters from now. But I should mention and I should note that in the previous 2 quarters the reaction used to be somewhat higher than average. For instance, in the last quarter it was 36 pips. And by the way, in all the 5 last quarters, the data has surprised us to the upside, so the data was ahead of the forecast. So speaking about the take profit and stop loss levels, the first take profit is actually located at 1.0640 level, which is the daily pivot point today for this currency pair. While in case, of course, we see much stronger than expected numbers, we can also see the euro declining even more versus the dollar, potentially down to the area of 106.30 or probably even lower. While in case of worse than expected data, we of course may see a spike in the value of the euro into the area of 106.80, where we can see the daily R1 and the weekly pivot point, 2 major resistances for this currency pair at the moment. Since I have just 50 seconds to go, I will shortly mention the technical indicators. What are they showing us today? As you can see, the 30-minute ones and the 1-hour indicators are actually pointing to the upside today. So they project that the currency pair will actually increase in value, while other indicators on the other time frames are pretty much flat, pretty much mixed right now, except the 1-month indicators, which are still pointing strongly downwards on the euro. I guess we just have some 10 seconds left till the data will be finally released, and we will hopefully see the numbers for the US Prelim GDP in the chat section. So let's just wait for a couple of more seconds from now to see that the data is actually released pretty much in line with expectations. The US GDP rose by 2.1% in the third quarter of this year, which actually matched perfectly the expectations, so there is no surprise from either the positive or the negative side. It is, of course, quite encouraging considering that the first estimate said that the US economy expanded just by 1.5%. So it's anyway a positive estimate, a positive revision, and we will also have third final revision for the GDP a bit later, I guess in some 1 month time from now. Speaking about the market reaction, actually we see that the euro is somewhat increasing in value against the US dollar, but the overall reaction is not that strong. So pretty much in the range of 10, 12 pips if we take into account the last minute's movements of this currency pair. So considering that the data brought us no surprise, it is quite logical and it makes sense that the reaction from the euro-dollar currency pair is not very strong either. Okay, I guess that for now that will be all from my side. Also on the technical part for this particular data release. Thank you very much for listening. I wish you all a great day ahead and see you all tomorrow. And yes, back to you, Polina.
Thank you, Max. Wonderful analysis as always. And yeah, pretty much that's all from our side. We got just what we expected, and I guess it's always nice. And yeah, we look forward to Black Friday and Cyber Monday. And I know that Doc is definitely also in this group. Yeah, I guess that's pretty much it. So Doc, if you're ready to continue, you're very welcome to do so. Thank you.